Hi there traders, this is Matt Krupski here with Chartered Financial Services, here with your weekly options beat on Tuesday, April the 11th. This week we've got crude oil options coming off soon. It's May. Crude oil options, they expire Monday the 17th. Of course, Good Friday coming up this Friday. Markets will be closed or abbreviated, so we're looking at the options that are coming off on Monday. Today, crude oil trading right around $53 a barrel. That puts quite a bit of calls in the money. If we settle here at expiration, you're looking at 36% of the calls in the money above 53. There's a large open interest on the 53 line, relatively speaking. You're looking at over 20,000 calls on the 53 line. If we continue to push higher to kind of where we were a couple weeks ago, 54 line's got over 15,000 and the 55 line has over 55,000 of open interest in the calls. So as we continue to push higher, we could continue to see these calls act as a magnet and pull the market up towards it. As a reminder, we look at these open interest as we approach expiration because of the mechanics involved with hedging these options. As they go in the money, especially with very little time to expiration, the Greeks on them change very quickly, especially the deltas, and the way these market makers have to hedge their options is through futures. So as their deltas start changing quickly, you can start to see more action in the futures market, and it can actually drive the direction of the market. So that's why we look at open interest. With that being said, the reverse can happen too. As these options go out of the money, people start to unwind their hedges, and that can push the market, in an opposite direction. So we take a look at the open interest, and we've got this chart here that shows if we finish in different settlement areas, what the calls open interest will be and what the puts open interest will be. So as I said today, trading around 53, that puts about 36% of the calls in the money and only 7% of the puts. As we go higher, obviously there's not a lot of puts in the money. They tend to come out. It goes from 7 to 0 basically if we get back up to the 55, 56 line. But as we come back down, you can see there's a large open interest in the put side at the 50 level. So if I had to guess based on looking at this open interest, which way we would go and judging on momentum of the market over the past couple weeks, I would look for us to continue to kind of push a little bit higher, test that 55 line, and then it wouldn't surprise me towards the end of the week, maybe Thursday into Monday morning, maybe some of that abbreviated weekend trade as well, to see a snapback hard and push back towards the 50 line. See what happens. Of course, any sort of global news could override any of this mechanical hedging activity, but that's based today looking at open interest. That would be my guess as to which way we go. If you'd like to talk about, why this happens, how this happens, I'd love to break it down for you. It's kind of hard to do on a short little video here. And just as a reminder, these are my thoughts, not those of ADM Investor Services or Chartered Financial Services. Feel free to give me a call, give me a buzz. I'd love to talk to you about this market or any others. Thanks a lot and have a great day.